Okay.
Okay, good afternoon, investor and corporate. Welcome to SET Digital Roadshow third quarter of 2023 performance review. This session will run about 45 minutes, including Q&A. Company will start the session by 30-minute presentation, followed by 15-minute Q&A. During Q&A, investor may leave your questions in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite PLASPAC Public Company Limited to start the presentation.
Vishal, please go ahead.
Good afternoon, Swadika. We welcome you to Thai PLASPAC first ever digital roadshow presentation for the quarter 3 of 2023. I have with me today our group CEO, Mr. Kevin Kumar Sharma, and myself, Vishal Agarwal, the group CEO for Thai PLASPAC. Swadika again, everyone. It's been a pleasure for all of us interacting with you guys over the last few quarters, and we are happy to come to you again with a very strong quarter performance that we demonstrated in the previous quarter. We will take the next 35 to 40 minutes to briefly give you an overview about our company, our journey, and then we will invite any questions in the last 15 minutes and happy to address that. Next slide, please.
Vishal, we'll take the next 30 minutes, 15 minutes is for Q&A.
Yeah, we'll do that. Yeah.
Yep.
Okay, so we take pride in introducing you all to TPAC, a specialty packaging solution provider. For some of you guys who may not be aware about who we are, we proudly claim to be Asia's fastest growing packaging company. We as a company are very focused towards emerging geographies, having presence in 5 geographies today, which present a high growth rate with respect to the world's average. And at the same time, we are also very specialized in the areas that we are operating in, or with 90% of our portfolio coming from food and pharma segment. The core of our business is built on a very strong design lab, which produces some of the finest products for our customers, which has led to a relationship spanning over the decades. As a customer profile, we also take pride in the fact that we are serving some of the best names in the food and the pharma segment, and have over the years diversified ourselves to address almost more than 1,500 customers across 50 countries. Last but not the least, in whatever we do, sustainability is on the top of our mind. And that goes in the choices that we have taken for our business. As a company, we are 100% mono-material focused company with proven mechanical recyclability for the polymers that we use. And we will talk more about it as we go forward. Next slide, please.
I think you're going to need to speed up, Vishal.
Yeah, this is just to give you a picture around how we started off. So the company that you see here was effectively reborn in 2016 when the new leadership came into place, a new shareholder came into place. They built on the foundation laid by the previous owners of around 30 years of history. But coming in 2016, there was a radical need to not only transform the company to drive it to the next level, but rather even to survive it in the context of where it was. And that's where the story unfolded. The next 2 years were spent diligently by the management in thinking through, looking at the environment, and taking very, very conscious choices of what the future is going to be of TPAC. And after a careful assessment, there were 6 strategic choices that were made, which defines who we are today. which is resulted in us being the Asia's fastest growing packaging company. The first choice goes back to what I said, of being totally sustainable in whatever we do. And that's where the management took a choice of being into rigids. We decided to be in geographies which present a high growth potential. India was seen to be a transformational move for TPAC, and we made conscious attempts since then to get into India, which culminated in 2018. We also realized that going organic may not serve our aspiration, so we built the muscle to be a very transformative M&A company, and which unfolds through 5 acquisitions that we did in over a period of 5 years. We also took a conscious choice of being very focused on food and pharma, which requires the stricter hygiene, clean room facilities, and also leads you with a very high customer stickiness and high entry barriers. And at the end, in terms of our customer choices, also we didn't want to hedge ourselves completely on 1 or 2 clients. So there was a very focused attempt made to ensure that we have a very diversified customer base. And finally, we wanted to make sure that the base on which we were building this new future, we ensure that it solidifies further from what it was built, and ensured that it leaves you with a strong cash flow generation. So with these strategic choices made in 2016 to 2018, next slide, please. What followed through was a seamless execution of this strategy. As you can see, from 18 to 23, we have been very busy. You can term us as a serial acquirers, and we feel pride in the fact that not only we have been acquiring company to have international expansion, but have been able to eventually create value in those expansions. So we grew both organically and inorganically in 2018 to 2023. Go down. And this is in front of you. The number speaks for itself. This is the world before and after. What transpired in the first 32 years versus what transpired in the last 7 years is for all of us to see. A company which was Thai focused with just 3 plants, limited technology expertise, now today is operating in 5 countries, is based in 5 countries, exporting to almost 50 countries with 17 plants, quadrupling their revenues, and also moved from the MAI to an SET exchange. And not only this, our focus towards corporate governance also enhanced, and today we have been consistently rated as 4 stars, which we are now aspiring to have 5 in the coming years. What did it mean for us financially? As you can see, we had in the last 5 years a CAGR growth of almost 30% at a top line level, and even a faster growth at an EBITDA level. And this gives us the title of being the Asia's fastest growing packaging company. What's most exciting for us and for you guys would be the fact that it's not about past, it's about what we intend to do in future. So a strong endeavor will be to keep this title even for the next decade to come. This is where we are today out of all the efforts. As you can see, all the orange colors represent where our products go, and the green colors are where we have established manufacturing presence with 3,000 employees. This kind of gives you a perspective on why we call ourselves a specialized company. With almost 75% of our portfolio focused on food segment, it demands and calls for a very high level of hygiene and clean room kind of environment, which is a niche. This is what we started off, and this is what we have built upon. If you look at our facilities across the globe, they will speak of the highest standards of infrastructure and technology, and most importantly, a very high clean room kind of an environment, which is something that you achieve over years of experience and capabilities. And that is what is our strength is, and that is what we have developed. We have not stopped there. As you can see, there has been a continuous progression on moving up the value chain in terms of the kind of products. The few products that you see on the right hand side are some of the first ones in the world to come out. One special mention that I like to make here is for one of the global herbs and spices player. We have come up as the first time in the world a very specialized UV IML solution with double barrier oxygen properties. So this is what keeps the customer sticking on with us, and this is what we pride in our journey with them over the years. Beyond the food segment, we also realize that pharma is another such segment which invites same kind of traits as far as the clean room requirement and hygiene requirements are concerned. Rather, it demands a notch level up. And that's something also we built upon in the last 6 to 7 years of our journey. Today, the pharma segment accounts for almost 15% of our total revenue. We have some best-in-class pharma-centric plants in our group. And today we are having serious discussions to move up the value chain beyond the regular pharma bottles and jars that we have been supplying to our global pharma clients to get more and more specialized into the medical space. All of this has resulted in these relationships, whether it is with the global MNCs, the pharma giants, or even our local Thai champions. These relationships are over almost 4 odd decades. Many of them are over 4 odd decades, which is a sign of their trust in us. But at the same time, the logos keep adding on an every year basis. And that's where you see a lot of the new emerging players and food giants on the top right of the graph, who happens to invite our curiosity. And at the same time, we are investing ourselves deeply with them as they go into new geographies to expand their presence. The important part for you guys to note here is that while all our clients are equally important, but still we ensure that we have a good diversified mix across geographies. And that is why the top 10 clients of ours do not constitute more than 30% of our business. So this is how our journey has been till date. In terms of how and what we plan for the next decade in terms of our growth strategy. I guess the first important strategy that we have for all our businesses, for all the geographies where we are present in, we have committed to ourselves that we would want to grow faster than the market growth, at least by 1.5x degree. The interesting part here, as you can see, is that in Thailand, India, UAE, and Malaysia, where we are, the market itself is growing faster than the world's average as far as packaging spend is concerned. We already enjoy a leadership position in the space that we are in. And we have a very clearly crafted strategy for each one of our geographies. But more importantly, it's our commitment of our management that we will grow at least 1.5x of the market growth rate for each one of the geographies organically. Go next. India, I think it's worth a special mention. We all are aware of how India is inviting world's attention in terms of being one of the world's largest consumption markets and fastest growing consumption market. We came in India in 2018, and at that point of time, it was a family owned business with 5 plants, processes not very streamlined. And we are very proud of the fact that from that modest journey of where that business was, with 5 plants, we have now doubled the plants, almost increased our volumes and profitability by 80%, and introduced new technologies within the business. Most importantly, the business today boasts of an independent, solid management team, which was erstwhile led by a founder. New state-of-the-art infrastructures have been developed. Very high focus on compliance and digitization has been brought in. And today, where we stand, we clearly see a much accelerated growth potential for this market for us in the next 5 to 6 years. We have 3 solid foundations from the erstwhile business, the new business that we acquired way down in south of India, which now has opened up a completely new market, and also a new vertical that we established in 2022 for getting into very high specialized customs and closures. With these solid foundations in place and the opportunities which India market offers, we believe this business potentially could be up for a very exciting IPO in the next 3 to 4 years if we desire to go down that route. The point we are trying to make here is we are very bullish on the market, and at the same time, we also are equally confident of the prospects of what we can do in this market, having the right foundations in place. Go down. The next strategy for us and growth strategy again goes back to what we are doing, what we know how to do best, and that is M&A, having acquired 5 companies in 5 years. Something that we are continuously refining with every passing transaction, the art of value creation. So we have a very strong muscle that has been created within the group, almost to the extent that it's a well-oiled M&A engine that I can say, to close deals in record timelines, which makes us most of the times the preferred suitor for most of the founders who are now looking at the right house for their asset, considering there are succession issues. Deep networks of partners and advisors, which allows us to tap into those insights and opportunities. And most importantly, a playbook which allows us to know what to do right from day 0 to day end to create value. The next decade is what we can tell you is a golden decade in Asia, where lots and lots of family-owned assets, great businesses are going to need the right house to get themselves consolidated. And this, we believe, can be transformative for TPAC, and rather, which will be transformative for TPAC. Go down. Won't spend much time, but this is a quick view to tell you how all the acquisitions we did, we enhanced share value. And enhancing share value came through not only increase in volumes, but also margin expansions in many cases, increasing our foothold in the market with new customers, new technologies. So in all the transactions that we did, there has been significant value that we could manage to create from what we acquired on day 1. Go down. Not just enhancing value for profit generating assets. I think this is another interesting case study where some assets that we acquired, the first one we did, was struggling in terms of its business, was loss making. And we are now, it took us some time, but now we come to you again with a lot of humility and pride to say that we also now have the recipe to turn loss-making businesses into a successful profit-generating case studies. And this happened through a series of steps. Most important, also patience, investments, belief in the business and people, and also most importantly, getting the right leadership team in place and transforming the shop floor culture. And with series of these initiatives, one after another, today we are at a stage where the profitability of one of our Thailand operations, which has been our concern, is now at par with our other Thailand operation, and we have much more room as we see, and the management is at early stages of crafting a full potential plan for this facility in times to come. While we do what we have to do individually for each one of our businesses, but I think the real magic happens as we start to leverage on the capabilities of each one of these assets from one place to another. We have done that, by transposing technologies, people, relationships, leveraging on procurement, and that is where the one TPAC group is able to draw more value and synergy out of all different operations and our presence in different parts of the world. So this also will remain as one of the fulcrums of our strategy as we go forward, to leverage on the group's strength and capabilities across. Go down. And lastly, I think till date, you would have seen us to be more heavier on the M&A route, but today we as a company, as a group, are ready with a management team in place we have the confidence of our customers to come to us and ask us to go into a new territory on a completely greenfield route. And that's something which we accomplished and have done by the most recent entry that we did in one of the fastest growing ASEAN countries, which is Philippines. And this has been a purely pull case by one of our customers in another geography who ventured into Philippines. They are one of Asia's most exciting dairy companies, and they simply asked us to follow them, and we have set the shop next door to them, and this set stone for us to get into another exciting ASEAN market. Coming to how all of this resulted in numbers for us from a financial highlight standpoint, as you can see, last 5 years it's been almost a 30% plus CAGR from a profitability standpoint. What's equally exciting is how our current year performance is, where we have already crossed the EPS of 9 months from what we did for the full year. So yeah, go down. I think not just profitability, what we also pay a lot of attention to is how are we able to convert our profits into cash flow. So as you can see, it's been our history of almost converting 75 to 80% of our EBITDA into operating cash, which gives us good room to invest further, both organically and inorganically. In past, you would see that our organic capex intensity was roughly close to around 1/3 of the EBITDA that we were generating. But now, a good portion was going into M&A investments. Now, with a solid management team in place in all high growth geographies, we feel much more confident to actually step the pedal on our organic capex intensity, which we are now taking up to almost 50% plus. And this basically speaks of our conviction on both the markets and our management's ability to draw value out of organic investments. I think I've already touched upon this point. Our 9 months performance, owing to a much sharper increase in the profitability, is already crossing what we did for FY22 as a whole. And I think the reason for that being is, go down. As you can see from the last 6 quarters of data, we are all aware of how the world was affected through a series of economic and geopolitical situations. We were also equally crippled by that, the high inflationary environment, cost going up. But it was the commitment of our management team that we responded at all levels, and we worked around in an environment where the market was not growing, by increasing our wallet share, embarked on world-class operational excellence measures, from energy savings through renewable energy projects, procurement excellence, and even going down till at a finance level of how we can save on every penny from a strong working capital management, as well as looking at our cost of capital. All of this helped us to come back to our earlier levels of profitability, which is now evident in the numbers that you see for 2023. Come down, please. And while all of this was happening, we made sure that we also keep our balance sheet in check in this environment. Our balance sheet had gone up to 1.3x of net debt to equity in last year of Q2. This was a time when we had done our last acquisition in south of India. And since then, while the growth has happened, but we have also been able to generate cash. And with the combination of equity and cash, we have been able to bring down our balance sheet to a very comfortable 1x level of net debt to equity. And then last but not the least, this is just the latest quarter in front of you. We have had almost 2 quarters of record profitability in this year. So the third quarter of 2023 presents Again, all-time high results in the history of TPAC with an EBITDA of 360 million Thai baht that we demonstrated and an EPS of 0.44. Go down. I guess to summarize things, the takeaways that we would like to draw out of this is you're talking to Asia's fastest growing packaging company with a very strong established track record of delivering value. We are in the business of polymers, but we are, and we believe with full conviction that we are the most sustainable packaging company today in terms of dealing with the monomaterial formats that we are. We are very specialized. We are not everywhere. We are specialized in the segments which require very high level of clean room kind of environment, high entry barriers, very hard to penetrate. And that's what has kept our niche and our margins in place. The fulcrum of all that we have done and what we will do is our management team, which has a strong pedigree and well established in all the growth geographies. And we have a balance sheet which can support growth both from an organic and inorganic investments. I think as an outlook, without being careful of not giving out any specific financial guidance which we can't and don't do. What we want to tell you is we remain very optimistic in sustaining this growth momentum. There is a very strong pipeline of M&A opportunities. We continue to look at them, we continue to evaluate, and as a company, and from us as a company, you can expect us to definitely use M&A route as a way also to expand and grow, in the next coming few years. Equally, this time we are investing and are going to increase the organic growth capex intensity. There are new markets that we have now entered into, which will present further growth potential, and new segments such as the specialized caps and closures that we have incorporated in India as a new company. And finally, we are also in the process of thinking through and almost building a 3-year vision and aspirational plan for ourselves, which hopefully we may want to even come to the capital markets and announce in the coming quarters.
Okay, this session has come to the end. Thank you very much, investor and corporate, for joining the conference. If you do need further details, please feel free to drop us an email. Thank you very much. ขอบคุณมากครับขอบคุณครับ
Yeah, I think we would like to take the opportunity to thanks everyone for joining us here today. As a company, we have a long way to go in terms of what we aspire to be as Asia's most respected packaging company. And at the same time, we also want to make sure that we are always available for you guys for any questions, clarifications, and even ideations if you have any comments for us. So we welcome any post event opportunities for you guys to engage with us or come to us with any questions, and we'll be happy to entertain it. Thank you so much, Swadikha, from our side.